Welcome to Mentors Collective. In this episode, we're going to teach you how to be a successful trader. I have lost a lot of money over the past couple of years investing in stocks and options and cryptocurrency. And my guess is if you're listening to the show, a lot of listeners have as well. So we are going to teach you the one strategy that has made Todd Rampe, a very successful investor. He's built Wealth Builders Institute, where he teaches people to do the exact same thing. So if you've listened to the end of this episode, you are going to have the arsenal, the tactics, the strategies to implement to not lose money investing again. Without further ado, welcome, Todd. How do you make money trading, man? What's the secret?
Thank you, Jay. I appreciate that intro. You make money by following the rules of your plan. Sounds pretty basic, but that's exactly what you do. You know, trading, you mentioned stocks, you mentioned options, you mentioned crypto. I don't know anything about crypto, and I don't want to know anything about it. To me, crypto is I live in Las Vegas. The Strip is about 20 minutes that way. And to me, investing in crypto is like going down there. I know I'm not making a lot of friends with some people. That's just my personal belief. But you make money by finding something that works and having the discipline to follow the rules of that plan and don't deviate from that plan, regardless of how greedy you get or how you think you can double your profits, or worse, you're increasing your investment to make up for some losses. You've got to stay the course. You've got to follow that plan and just stick with it. And that's really the key.
But it's scary, right? And I've been there myself as an investor. You get starry-eyed looking at all of these opportunities.
Definitely.
You can do crypto and make 1,000x returns buying these meme coins. You can invest in stocks, options. Forex is a big thing that I know nothing about. So how do you find that strategy that works? How do you pick one?
Well, it's a jungle out there in the trading education world. It really is, because you can't turn your phone on, you can't turn your computer on without hearing about some new guru with zero experience who's trying to teach you his method. And the truth is 90% of what's out there doesn't work. And I'm going to go out on a limb here and say about 95% of the gurus that are teaching this can't make any money with what they're teaching. They've created a business of selling information. And I started out as a trader. 24 years ago, I met a gentleman that I refer to as my 7-figure mentor. And, I really wanted to learn how to make money. And I'll tell you a quick story that I used to fly out to his house every 2 weeks, and he would spoon feed me just a little bit of information and say, go away, study that, don't study anything else. It really was just like the Karate Kid movie, wax on, wax off. So I would go back and he'd say, okay, here's a little bit more. And frankly, I was not happy with the way he was doing it, because I felt like I could easily absorb a lot more, but there was a method to his madness. And at the end, it's like, you know what? Now I can look at a chart and within 2 seconds tell you if we've got a qualified trade. So when I went out there, I think it was the second visit, I said, hey, and I brought these books with me. I wanted to show him that I was taking the initiative, that I was going to be a good student and all that. And I said, look, I read these books. And he's kind of looked at me and he said, Todd, do you want to become an expert in options, or do you want to learn how to make money trading options? And I went, the money. He said, put the books down, sit down. I'm going to teach you to become a directional trader. If we think the market's going up, you're going to buy calls. If we think the market's going down, you're going to buy puts. That's it. End of story. And the truth is, for 24 years, that's all I've done. And for 24 years, I couldn't tell you how to put on a credit spread, an iron condor, butterfly. I don't know any of those. I know nothing about those complicated strategies. I only know this method that I learned from him. And my attitude is, why do you need to learn anything else if what you have works and you can scale it? Just doesn't make any sense.
And you said some words that I'm familiar with, and that excites me a lot. When the market goes up, you buy calls. When it goes down, you buy puts. Sometimes I talk to traders on here, and the jargon is just unbelievable. So the fact that you've simplified this into a way where people can understand it, I think it makes it a lot easier to buy into something like this. And you mentioned something earlier that I want to circle back to. And that was the fake gurus online selling get-rich-quick trading schemes and education. And I see this all too often. I see people get duped by these advertisements and verbiage to come on board, do this thing, and they're going to make money overnight.
Right.
Have you had a lot of experience with people like that? What is your your call to action for people who may have bought into these ads or are planning to?
I talk to traders every day. I've talked to thousands of traders over the years. They all seem to have a similar experience in that they've, as you put it, they've been duped by these guys. And so I tell people, I do all my own videos here. We're pretty sophisticated here for trading educators. I'm not working out of my mother's basement, and I tell people, listen, whether or not you enroll with us, do me a favor and make sure that whatever you're looking at, you can verify that it actually works before you hand over your credit card. So if they're telling you X, Y, Z has to happen and the price should change direction, they should be able to show you example after example after example of that happening. And if they can't, or they tell you that there's no way they can do it, or what, there's, run for the hills. You're going to buy they're trying to sell you a bill of goods. So what we do with our students is we talk about it. Our rules are etched in stone. They're the same, whether the market's going up, down, or sideways. We don't care. So here they are, step 1, step 2, step 3. Now, 75% of the time, when my rules line up, the price will change direction, which is what we want to have happen. Doesn't mean that you're going to be right 75% of the time, because you have to exercise self-control, discipline, and all that. And you have to keep the emotions at bay. The two emotions in trading are fear and greed. And if you can't get a handle on those, you're going to have a tough time. But the way we teach it is a step-by-step method to prevent you from allowing the emotional aspect of trading to creep into the picture.
Right. And emotion can dominate for me too, I think having a Robinhood trades at the right at your fingertips is a very dangerous thing. I recently transferred everything to my financial advisor for that reason. Emotion takes over, at least especially for inexperienced traders like myself, and mistakes are made. Todd, let's dig into the strategy a little bit, because I'm really interested to see kind of overarching what you teach. I think the listeners are going to be really interested in hearing how they can potentially use some of these tools. And obviously, I'm sure you can't teach this in 30 to 60 minutes. You have courses and trainings and coachings to get people to a level where they can be confident and successful. But I'd love to dive a little bit into the overarching theme of what you teach. How do you know when the market's going up and down? What do you do when you see those notifications or those alerts? Talk me through the system.
Sure. The number one thing that we do is we follow the smart money, the professional traders. And it reminds me of, I'm sure we've all, as entrepreneurs, we've all heard this. Hey, if you want to learn how to make $1 million, hang around with a millionaire. Right. And if you want to learn how to be a successful trader, or you want to follow in the footsteps of the professional traders, you better figure out a way to see what they're doing, or what they're about to do, really, what they're doing prior to them doing that, prior to that execution. And many times you will look at not many times, every single day, you'll look at the charts and you'll see the price of Apple go down. Then all of a sudden, for apparently no reason, it just makes a U-turn and starts to go back up. And I say this all the time. Wouldn't it be nice to be able to know when that takes place so you can jump on? And that's what we do. So these market reversals are, I call it a sneaky little tactic that the smart money does, because the smart money's job is to pick the pockets of the retail traders. We've all heard zero-sum game. Somebody wins, somebody loses. They're interested in faking, setting up these head fakes so that they can pick your pockets and obviously reel you in. And they do that with these different patterns. We look for 4 different patterns. And, you'll see the price go down, it'll go up, they get nervous, people get out, then they see it go back down, they go, oh, it's really going down, I'm going to short, I'm going to get back on this short, and then it spikes up. And, that's a pattern, it's called an H pattern. It's something that I use a lot in the marketing material. And our ability to spot that is what separates us from everybody else. Plus the fact that I've developed software that, it's proprietary software that its sole focus function is to spot these market reversals. You're not going to be right 100% of the time. If you were, we wouldn't be talking right now. Right. It would be a completely different scenario. But I put you in the best possible position, and anybody can learn how to do this. People have a misconception that you have to have Wall Street experience, you have to have an Ivy League education, or you have to have deep pockets, and none of those are true.
So first question, because this is a strategy that I've actually talked to with some friends. how do you know what politicians, big players like Warren Buffett are doing before it hits like the public Twitter sector? Like, where do you get those notifications so that you can act on them fast?
I will tell you, Jay, that I don't care about those. That has nothing to do with how I trade.
What is smart money?
And well, the smart money is, when I refer to them, I'm talking about what they're doing during the day, not so much, the Warren Buffetts of the world that are scaling into Coca-Cola or something.
Right.
I'm talking about the intraday price swings. You've got three types of markets. You've got cycling, looks like a roller coaster. You've got trending, and then you've got sideways, and that's it. So you need something that works in all three of those markets, and we don't care if the market's going up or down, as I said. And so what we look for is the smart money to just take the professional traders have $3 trillion at their fingertips, and they can't just go in and buy and sit back and wait for the price to go up. They have to maneuver, they have to scale in and scale out in order to create that volatility, because without volatility, the stock price will flatline and nobody will buy it. So they have to create this volatility to get people excited to come on. And it's like what is the expression? It's like luring the lambs to slaughter or something like that. Reeling in the suckers. And it's actually a pretty simple approach when, obviously once you learn how to do it. It's like the combination to the safe. If you know those three numbers, you don't need to know anything else. Those three numbers will open the safe for you.
Interesting. So smart money, we're talking about hedge funds, professional traders, people with access to lots of capital.
Banks.
And they need to, I guess, stimulate fear in traders like myself to leave a position, to drop the price of that stock so that they can then buy back in at a cheaper price, make some money. Yep. Very cool. Yep. So I guess you use a model to determine when it is fear and determine like when they're moving the price versus the market or something else that's moving the price. And if you can figure out if it's them, then that's a good time to buy in. Talk to me a little bit about that decision-making process.
Sure. My software is called Triple Sync Logic, and I came up with the name because we look at three different time frames: slow, medium, and fast. So we're looking at that slow, medium, and fast snapshot of the market. And what we're looking for are, and that's triple, the three, triple sync. Sync is when all three of them line up, and logic is just a word for computer code. So you've got this approach where we want to see the slow, medium, and the fast moving markets all line up. And then that's step one. And then step two, we need to see two of our patterns, because, one is good, two is better. It's like two heads are better than one. We want to see two of these patterns set up. And that gives us the what I like to describe as the A+ high value trades. And once we have those two key rules ticked off, we can then look to my turn bar dots, which is a proprietary indicator. And it literally will plot a green dot below the price bar or a red dot above the price bar. And what that does is it lets us know that at that particular time, there are more buyers or more sellers. So if you're looking to go long, you want to see a green dot. And it just gives you that extra confidence, that extra confirmation. And that's really what it is a confirmation tool. So we do that when all of those line up, the probability of it being a market reversal skyrockets. And that's what we wait for. I tell people, and I've been saying this for years, I say, listen, people, they hear day trading. And you think, oh, you're in there clicking the mouse, 50 times a day. It's not what we do. We're more like snipers. We're more lying in wait. And we wait until one of these high value trades sets up. And I say we get paid for being patient. Some people, new traders especially, they're excited, they're anxious, they want to trade. I'm like, take it easy. Not trading is a trading decision. If you're putting money at risk and you don't know why you're doing it, the risk skyrockets. So we're going to teach you to avoid that. We're going to sit back. We're going to wait until all of our rules line up, and only then will you participate in the trade.
Who has access to this software? Is this through your program, or is this something that other people can log into and use?
We are the only place on planet Earth where you can get it. And I love saying that. I've got a staff of program advisors that help people make the decision whether or not this is right for them. And some people hear that and go, yeah, right. You'll sell it to anybody. We really won't. Right. And I'll tell you why, because if you don't have the desire, the dedication, and the discipline to do this, you're going to fail. And when you fail, you tend to point the finger. You never point the finger back at you. You look to, who can I blame for my failure, my mistake? So we don't want to deal with anybody that frankly isn't serious. So we make the software available in a course that we teach. It's over an 8-week period. We meet live once or twice a week for 8 consecutive weeks. And the course also comes with a lifetime license of my triple sync logic software.
That's a nice premium right there to add to the course. I love it. Talk to me about how you make decisions on which stocks to buy, because I know that you're looking at kind of market trends. Which stocks do you follow and why?
Right now, and for probably a solid 2 years, we have really paid attention to just 5 markets: Apple, Facebook, NVIDIA, and 2 ETFs, 2 exchange traded funds, the SPYs and the Qs. And that's it. People think I need to come up with this fancy scanner to know what's hot today, or what's the Reddit stock, what are all the social media people talking about. And to me, that is just an elevated. I don't know if it's even elevated. To me, it's gambling. You're basing your trading decision based on what a group of people said. And the only time that really worked out for the little guy was the GameStop deal not too long ago. Other than that, you get your head handed to you, because if the information that you're trading on is based on the talk on the street, chances are incredibly high that you are late to the party. So if you can't look at a chart and with a repeatable strategy pick these market reversals, you're probably gambling. I don't want to harp on the people with no real strategies, but you're probably gambling.
One of the most important things you just said is that if you're finding out from social media, you're probably late to the party. This is a lesson that I learned a little bit too late. When you're hearing stock picking advice from people on YouTube and Reddit, and right, the conversations are happening around that stock, that thing's likely being pumped. And if you put money in at that point, you're likely going to lose your bag. When my mom called me and said, I just heard Gary Vee talking about Ethereum. Should I buy some Ethereum? I sold all of my Ethereum right then and there. And it ended up being a great decision. So when something's being hyped and you're hearing lots of stuff about it online, yep, maybe you get another couple percentage out of it, but chances are that thing's going lower, at least in my brief experience.
Yeah, sorry, what you just explained, there's an old story, and I don't remember who it was. It's like Rothschild or Rockefeller or JP Morgan, one of those guys. And you've probably heard this, where he was on the street in probably the 30s or 20s or whatever, and he was having his shoes shined. And the shoe shine boy said, let's say Rockefeller, Mr. Rockefeller, I heard XYZ stock is great. He walked into his office, said, sell all of it. When the shoe shine boy on the street is giving stock advice, I want no part of that stock. And you literally just said a version of that.
I've never heard that story. Thank you for sharing. That'll make a fun little sound bit. So let's talk a little bit about traders who are thinking about finding a strategy, really want to dial it in, and maybe haven't had so much success yet. Do you think your strategy is the strategy, the way to go? Are there multiple ways to become successful trading? How do you choose one? Where do you look?
I'm a little, how should I word this? I'm
biased.
Yeah, well, definitely biased, but I'm also not your typical, on the face of the ads trading guru. And I just shot a video the other day. I said, look, I'm considered a trading educator, trading guru, but I'm not, because I only know how to do something. I only know how to do it one way. So all of my students learn the exact same way, the exact same approach, whether the market's going up or down, we're going to buy calls, buy puts. and everything else, I leave to all the other people that want to learn this. Now, to answer your question, I don't know what is a good fit for most people. Some people are, hey, I want to do covered calls. I couldn't put a covered call on if you put a gun to my head. That's the truth. And I have no interest in learning it because I don't feel like I need to branch out and just add more stuff to what I'm doing, because I'm in a business where if I want to make more money, I just scale it. I can buy 10 contracts, right. I can buy 100, I can buy 200. So why, and what I do works, and I know how to do it very well. So why would I take the time to go learn something else where, and I tell my students all the time, once you learn how to make $500 a day, you have all of the tools and the knowledge to make $5,000 a day. And believe it or not, you have all the tools and knowledge to make $50,000 a day. Most people can't wrap their head around that figure. And I don't make any promises that you're going to be able to do that. My point is the steps to get to that winning trade, that profitable trade, remain the same regardless of your investment. That's what I love about this. And it doesn't interest me to look outside of that. So is it right for people? I think so. I tell people all the time, look, I don't care what your experience level is. Brand new trader. Again, I live here in Las Vegas. I'm in an elevator, and people are friendly, in Las Vegas when they're in elevators, because they've been, having a good time. They're like, hey, what's your name? Where do you live? What do you do? And I've never had the answer be different than what I'm about to tell you. They say, what do you do? I say, well, I teach people how to make money trading stock options. And the answer is always the same. Oh, man, I've always wanted to do that. And I say, well, why haven't you? And then they sit there and go, I don't know. Isn't it complicated? No. Anybody can learn how to do this. Brand new trader, seasoned trader. As a matter of fact, in most cases, the brand new trader that has no track record is easier to teach, because they don't have all of this baggage with them that they bought, other indicators and things that don't work. And they're trying to, marry the two together to create some, ultimate trading weapon. But here's the thing. If what you're doing doesn't work, it doesn't matter if you take what I do and add it to it, you're diluting its validity, its success. So, here's a little piece of advice. And it's not like I'm standing on the sidelines pointing the finger, because even with a 7-figure mentor, I still went out and bought $40,000 worth of other indicators and programs, thinking it would give me a little bit of an edge. And it's all sitting on a computer in my house, and I haven't turned that computer on in probably 15 years. So, just stick with the basics. As I said earlier, follow what works and scale it when you're ready, but crawl before you walk. This isn't a race. People think it's get rich quick. It's not. You think it's get rich quick, you're going to get slapped up and down the street. The market is unforgiving, as you know, unfortunately. And by the way, again, I'm not pointing fingers, because I've never met anyone that's lost more money than me. Now, you hear that and you go, well, then why the hell should I listen to you? This was in 2000, the week of the dot-com bubble bursting. And I was my ego took over from my trading. And I decided, well, as I was down a huge one day, I went, I'm going to hang on to everything, because it'll be back tomorrow. It always comes back. And by the end of that week, I lost $400,000. And that 400 grand hurt. It hurt a lot. And so why should you listen to me after that? Because I've been able to come back from that loss, where most people are they're done. That's it. They never, it's like getting back on the horse. They never want to see that horse again. But I was determined. I knew that the mistakes that I made that led to that loss was 100% my fault. Had I just followed my rules that I keep preaching, I would have cut my losses at about 7.5% initially, and I would have been safe. But I got greedy.
It's funny, the lessons that you learn, I feel like have to be learned with your own money, or they're not really cemented in there.
That is very true. That is very true.
And you mentioned a lot of people say, oh, I wanted to be a trader. I wanted to learn that. The lifestyle, and I think what is perceived of it on social media, looks very glamorous, very flashy. Big money trades, people making 6 figures in minutes, Lamborghinis. Yep. And I guess that's on purpose. Those people are usually trying to sell you a course or something of that nature. Talk to me about kind of the day to day. And I also love to know what was your biggest trading day?
Oh, I'm not a home run trader. So it's not like I can give you that, I can tell you my losses. And most trading educators, they don't want to talk about their losses. I generally lead with it. And I say, now, how many of you could sustain, that kind of a loss and be okay with it? And nobody's hand goes up, no one. But the guys that are, as you put it, the Lambos and all that, I have a saying for them. The guys that look like $1 million usually owe $1 million. Everything's rented. I don't know. That whole way of marketing to me is silly. I think people are much more sophisticated than advertisers give them credit for.
Yeah. So people are attracted to the lifestyle, and I think people take advantage of that. Definitely. I'd love to spend some time. Obviously, the market's in a crazy place right now, and you follow the smart money. You probably follow the market much closer than I do and most of my friends. I'd love to hear your expert opinion on what is the environment like right now and what you foresee happening. And because of this, we're recording on October 5th, 2022. For those of you listening, I'm going to try and air this thing pretty quickly because this is relevant and it's coming up soon. But what are your thoughts on the current economic climates? Where do you see this thing going?
I think, again, and I want to preface it by saying this is just my opinion, okay? I'm not an expert. I don't have a crystal ball. What I do have is an incredibly dependable chart that tells me what's going on in between the opening bell and the closing bell. Outside of that, it's pure speculation. However, I'll give you my answer. I think this economy is... I don't want to say it's the tip of the iceberg. Maybe, I still think it's going down. The government, the current administration likes to redefine the definition of recession. They can say whatever they want. It's a recession, 100%. And typically things take a long time to cycle through. So I do believe that it's going to get worse. I do believe that the prices of everything are going to come down. Which means, the cost of, when I say prices, there's a huge difference between price and cost. I don't want to get off on that tangent, but, the cost of goods are going to go up. The price of those Lambos are going to come down. So if you figure out how to make your money now, you'll be able to buy them, cheap. But I don't think that we are going to see this. I don't believe this is a retracement. I don't believe this is a dip. A lot of traders buy on the dip. Well, I was talking to someone earlier today, and they were talking about how they were doing these trades where it's longer term, and they were talking about NVIDIA and how longer term positions will help. And I said, hold on a second. I looked at my charts, and I said, on August 16th, NVIDIA was $190. Today, it's 138. August 16th was, less than 2 months ago. So it's dropped $60, $50 in that amount of time. So all the people that were bullish on that stock, and you can pretty much fill in the blank for any stock from August until today, because everything's come down. And you look at that and you think, wow, if you held on, you are probably unhappy. You're probably very unhappy. And that's why the number one advice that I can give people when it comes to actually trading is honor your stop. Number one, you buy something, immediately put a stop in. Number two, honor that stop, because we human beings love to rationalize things. Oh, it dropped down. Yeah, but this is unusual. I'll be okay. And then it drops a little bit farther and you go, well, that's unusual, but it's so unusual that it's okay. It can't go on. And I did that. That's when I lost the 400K. Monday I lost $87,000. And I went and had dinner with a buddy of mine, and I told him, I said, I lost 87 grand. He almost fell over. He's like, 87 grand. He goes, give it to me. I could use it. Well, Tuesday was worse. Wednesday was worse. Thursday was worse. And I kept hanging on to that dream that it was going to come back. Yep. So the best piece of advice I could give is no matter what, you put that hard stop in and you don't touch it. Let it do its thing. It's protecting.
Because if you didn't sell on Monday, that 87 grand would have been a lot more, right?
Yes, absolutely.
That's a great piece of advice. So,
and if I sold during the day on Monday, I wouldn't have lost 87,000. I was pig-headed during the day. So it's not like, it's not like the market closed and I went, oh, no, now I'm going to decide. No, I was making those poor decisions every hour, of that Monday.
When to sell has been one of the hardest decisions to make. And that's where I think my financial advisor, a voice of reason, somebody unemotionally attached to my money, has been helpful for me at least. But I guess teaching the emotional strategy and how to handle those things inside of your course is a good way to remedy that.
Definitely.
Talk to me about the course that you run, the process. What do you put students through to turn them into successful traders?
We put them through, depending on their time frame, it typically takes 60 days for them to get this down. And when I say get this, you hear me say it's a 3 simple step process, and then you hear me say 60 days to learn it. That doesn't mesh. That doesn't make sense. Well, that's because we spend the vast majority of that 60 days with you with the training wheels on. We want to make damn sure that you are okay, because there's absolutely no reason why you should lose any money while you're learning how to trade. If you are losing money while you're learning how to trade, you are not following the rules. You are not getting into this as far as an education, learning what you're doing and getting that down first. So how it works with us is we strongly suggest that everyone paper trade for 30 days. So you learn the process and you write down the trade once you see it on your chart, and you see how well you did, and you track it. Simple, literally write it down on paper. Just make sure that you can spot the trades and manage them properly. And then once you see at least a 60% win rate, then go to trading one contract. Now, the reason you go from paper to one contract and not 10 is that one contract is the smallest amount that you can invest in options. We trade the weekly, so you're typically investing about $250. Now, our stop losses are very, very tight. They're 15 cents on the option. So that one contract, you're risking $15. That's it. Now, Jay, if you lost 3 times in a row and lost $15, $15, and $15, it's not going to keep you up at night. You're going to go, oh, well, hey, I need to go back to the drawing board. There's something I missed. Incidentally, when I tell people as a new student, if you suffer 3 losses in a row, you need to stop what you're doing because you're doing something wrong. We just don't see 3 losses in a row when you follow our rules. So again, you have to, there's that accountability factor. So they go to that one contract because they've got a little skin in the game. And what that does is it triggers in our brains the ability to focus on the charts a lot more than if you had no money in the trade. And it's a weird thing. You don't have to have $10,000 or $50,000 on the line for the charts to capture your attention. Just one little $250 investment, and you're going to sit there and watch the charts. If you're hungry, you're not going to get up and go make a sandwich. But if you're paper trading, you'll get up and go make that sandwich and come back. Oh, what happened? When your real money is on the line, you stay zeroed in on it and you don't take your eyes off of it so that you can manage the trade. So we do that. And then once you maintain that 60% with the one contract, then go to 5 or 10 or whatever. Now, 10 contracts is only about a $2,500 investment, the way that we teach it. Your risk, $150, multiples of, $15 per contract. So again, if you lost $2,500, I'm pretty sure your life wouldn't change one bit. You won't like it, and you don't want to keep doing that. But you're in a position where with that $2,500 investment, you can make 2 or 3 or 4 trades a day and, end the day up $400, $500, $800, $1,000, whatever, while you're learning. And I tell people, listen, I don't care who you are, $800 a day is a good living. At the end of the week, you've put a few $1,000 in the bank, and now you've built up what I call your stop loss bank. It pays for all future losses. And that's where you want to be. It's like being here, you want to trade with the house's money.
I've talked to a lot of different traders who teach different strategies. This one actually seems like it makes a lot of sense. So it's very cool what you've developed and what you do.
Great.
A couple final questions here for you. Obviously, you've been trading for a very long time. I wonder if there's any specific investor that you follow, respect, and like more than any other investor? Are you a fan of anyone in particular?
No. And that sounds really arrogant, but it has nothing to do with that. It's just that the way investors work versus what I do, it's apples and oranges.
Right.
Everybody, every time they mention something to do with investing, Warren Buffett's name pops up. Always. He's the oracle. Everybody knows that. Do you know how few people can follow in his footsteps and do what he does? It is literally a drop in the bucket. There's no way that you could look at the list of the stocks that he buys, but do you have the staying power of that guy? I remember in the 80s reading the newspaper and seeing Berkshire Hathaway was $16,000 a share. And I thought, you've got to be kidding me. Who in the world would pay that? And, then it gets up to whatever, a couple 100,000. I don't even know. I don't even pay attention to it. But to answer your question, I don't really follow. It's funny. I was in a room at a party with one of the list brokers that I use, and all these trading educators are in there. And I said to the guy that owned the company, he said, "Hey, you want to meet so and so?" I said, "No, thank you." He said, "You want to meet that guy?" I went, "Not really." And he said, "What's wrong with you?" And I said, "Why do I want to meet these guys? They're my competition, number one. And I don't believe a word that comes out of their mouth." So I don't want to go stand there and have a beer with them. I said, as a matter of fact, Mike, I think I'm going to take off. But thank you for inviting me. I just don't pay attention, and it's not arrogance. And I know, Jay, I know it sounds arrogant, has nothing to do with that. It's just that I'm comfortable doing what I do, and I don't really. It's like staying in your lane. How about that?
I like tunnel vision, laser focus, tuning out all of the noise around you. I think can be really important for entrepreneurs to grow their business.
Absolutely.
By focusing on what works. It's really easy to get sidetracked, distracted by other ideas and what people are doing. So a lot of the most successful people that I've talked to have honestly the same answer. What gurus do you follow? Who's your favorite marketer? Like, I don't have one. I don't read those books. I don't watch those people. So, hey, I respect that answer.
Good. I'm glad you liked my answer, because as the words were coming out, I'm like, boy, this doesn't sound good.
Todd, where can people go to follow what you do? Maybe even sign up for your course, get some more information.
Sure. Wealthbuildersinstitute.com or WBItrading.com.
All right, Todd, I'm going to link that in the show notes. If you're listening, go and check that out. If you're not already subscribed, please be sure to do so if you got any value here. And Todd, I had a blast talking with you. I'm going to go check out what you're doing as well. Would love to dig into some options trading. Maybe you can recoup some of my losses over the past 2 years. Thank you for sharing that with me.
My pleasure. Thank you for having me, Jay. I really appreciate it.